Hello traders, Namaskar. The markets managed to consolidate yesterday's big bounce back with a negative close in today's session. Couple of interesting points came out in today's price activity. One, the markets cooled off from our anticipated resistances. Two, the markets have settled close to the supports, which brings us to a very important question. What are we heading towards tomorrow? Especially keeping in mind we have the weekly derivatives expiry. So let's take a closer look at the prices and try to figure out what can we expect in tomorrow's trading session. As always, we are here looking at the daily chart of the Nifty near-month futures. And if you remember, we had drawn these zones of resistances and support in our intraday charts. This is the 75-minute time frame of the Nifty near-month futures. This was the breakout. This was the move. We drew this range yesterday, expecting resistance. We drew this volume profile. And beautifully, it means really like a beautiful cover drive, markets reacted from these anticipated levels. We also took a call that on the downside, Nifty psychological 16K, 16,100 should act as your short-term support. And as long as this range holds, we can still expect that this bounce back can extend further up. So for the Nifty, we should continue to hold on to that view. We should continue to hold on to that view that after a series of strong negative days, the index finally bounced back with a 400-point gains, which helped the short-term moving averages to turn around. And so after such sharp bounce backs, it is very normal that we get a short-term consolidation / correction, and that's exactly what happened today. The important thing is what is going to happen, what can we expect tomorrow. Now, in terms of levels, I would repeat that as long as this range holds for the Nifty, we should be more biased towards the long side, number one. And on the upside, the immediate resistance stays here. For the BankNifty, let's take a look at the same chart, and we have the same thing. We have the breakout zone here and the resistance band, and in this case also BankNifty corrected exactly close to our anticipated zone of resistance. What has happened with BankNifty is BankNifty has come off and it has come down to its erstwhile breakout zone, which in simple terms means that BankNifty is back to supports. BankNifty is more make or break than the Nifty. I would say Nifty still has 100 points to lose, still okay, but BankNifty should not lose any further grounds from here on. 34,150, we spoke about 34,100 kind of support, which is near this zone, and that's exactly where it is. So we can allow the BankNifty 150 points on a closing basis. If the index manages to hold on to that, we can expect that this leg up has finished its short-term correction, and then we can expect the next leg on the upside. If it disappoints, then we are back to some weakness. Now, it's going to be a very interesting volatile expiry tomorrow, because if we now take a look at the options data, it's a complete turnover from what we saw yesterday. You can see this is the Nifty's data, and you can see how clearly it was a complete put unwinding and called writing in today's trade. It was just an upside down. It was all greens here, put writing, and all the calls had unwinded as yesterday's close, and today's close, it's just a turnaround story. So what I tend to ask myself Tomorrow is the weekly expiry. And one side of the options is very likely to expire worthless, very close to zero. Likely. So which side is it going to be? Generally, I have noticed that from Tuesday, Wednesday onwards, as we move towards Thursday, the tendency gets well established that it's the week of call writers or it's the week of put writers. But this time it's difficult, it's different. So as of now, looking at the option data of the Nifty as well as the Bank Nifty, clearly it was put unwinding and call writing. It's not a very big number here for the call writers on the Bank Nifty, but nevertheless, clearly put unwinding and call writing for both the Nifty and the Bank Nifty. So what do I feel? What is likely to happen? I would focus more on the Bank Nifty because I think the Bank Nifty is more critical at a very critical juncture rather than the Nifty. So I feel that Bank Nifty is definitely in a make or break situation. I use the word make or break because we have the expiry tomorrow. If it was not expiry tomorrow, then I would have allowed a little bit of more room or scope. Because one side is likely to sell off very strong in the options market. So where it is right now, and this is the 75-minute time frame, I feel that if the Bank Nifty manages to take out the last bar's high, which is close to 34,260, so you can use something like 34,300 on the upside. Once it takes that level out on an intraday basis, I sense that this leg is heading further up towards 34,600, if not further more. And in that case, all that you need to do is just head out and sell the 34,000 puts. Give the market first 15-20 minutes of trade and see whether it manages to take out 34,300 or not. On the other hand, if it breaks below this bar's low, which is the psychological 34,000 mark, then I would look to rather sell on a rise. I will not sell the breakdown of 34,000. Doesn't make sense to sell a stock which is down for 3-4 bars consecutive. So I would rather use the break below 34,000 as a sign that it's going to be the call writer's expiry, and I would be looking to act accordingly, sell the calls, but I would use the bounce back. So if the Bank Nifty breaks below 34,000 on the downside on an intraday basis, give it some time and wait for the bounce back. Accordingly, you can act in the options market or futures according to your trading style. But Bank Nifty is the more important one for me. And 3 stocks which within the banking is going to again help the Bank Nifty being a make or break. State Bank of India clearly is a very important counter. It's an inside bar. And this stock needs to either, show some strength and try and test 464, 465, or else a break below this and it's going to stay down. HDFC Bank and ICICI Bank. This is the chart of ICICI Bank. Same logic, break below today's low, can infuse some fresh selling intensity. And finally, the HDFC Bank. Now, HDFC Bank actually did not participate in the bounce back. So amongst these 3, the one which is the weakest is clearly HDFC Bank. So it has shown signs of weakness, and if it breaks below today's low, all these 3 stocks, these are the 3 stocks which are likely to drag the Bank Nifty sub 34K. And going by this option data, we can clearly expect that it will be the call writers week or call writers expiry. Finishing off by taking a look at the intraday option movement, as the index essentially stayed low throughout the day's trade. There was a little bit of volatility in the afternoon. We can clearly notice how the puts unwinded throughout, and towards the end there was a little bit of call unwinding, and that's why in absolute terms we don't see a lot of call writers per se, but nevertheless something. As I said, it's going to be different. It's going to be difficult. But I'm going to quickly take a look at the option chain of especially the Bank Nifty and take a look at the highest open interest bases. The highest one on the put side is 33K. Then we have 34K. So I'm going to go for 34K if I have to act on the put side. And on the call side, we have 34,500 and 35. So I'm going to go for 34,500 and 34, depending on how the prices play out. As I record this video for everyone, take a look at the global markets, and the US markets are down. Not a gap down for the Nasdaq or the S&P, but clearly a weak opening high and selling off, and 75 points down SGX. The cues that we get from here, and we can expect the market to open accordingly in tomorrow's session, might be a weakish opening for the markets. If you find yourself not too sure, confused, inhibitions, it's better not to trade, because there will be no dearth of opportunities, and the volatility was very evident. If you take a look at the 34K put option chart or the 34K call option chart, you'll find some crazy movement towards the afternoon. The probability of getting chopped out, whipsawed, stop losses getting hit is very, very high in this kind of state of the market. So in case there is confusion, which I have some degree for sure, better stay away and wait for a better opportunity to play out. So trade wisely. Take care of yourselves. Trade well. Trade wise.